Pre-Market Prep. I'm Brianna Valesky in for Joel Elconin. I'm joined by Greg Harmon. He is the founder of Dragonfly Capital Management. Greg, thank you so much for joining us on the show today.
Thanks for having me, Brianna.
Absolutely. Well, we're dipping into earnings season right now, approaching the heart of it. But what's your take on the broader market right now? What are you seeing?
I think the broader market is still stuck in a range. We've got the S&P and the broad market crashed down in August and bounced back up into early September, crashed back down late September. Looked to start the week as if maybe we might be breaking out of that range, but that seems to have failed now, and we're stuck in a rut. When I look at the SPY, it certainly seems right now, trading just over 200, that we stand a good chance of pinning at 200 on Friday with all the open interest at that strike. The one thing that's been a little bit odd to me is the relative weakness in the IWM. I wrote about this a couple days ago, but it looks like a harmonic pattern called the three drives that could result in the IWM dropping down as low as 104 before it's all finished. So that's the big surprise to me in the U.S. market.
Okay. You had also mentioned that you were looking at weakness in China. Can you expand on that for our audience a little bit?
Well, actually, not weakness in China. I think that the Chinese market, in particular, the Shanghai Composite, has come off quite a bit from the peak that it made in 2011.
Mm-hmm.
But the bounce that it took just recently, with the intervention from the Chinese government, whatever you want to call it, really had put some support underneath the Chinese market at about the 3,000 level, and it was trading in between 3,000 and 3,200 for quite a while. Now they've come back from vacation, and we're starting to bounce up out of that range to the upside. And there's a lot of overhead supply still until you get to 3,400, but the Shanghai Composite closed at 33.38 today, so we're getting close to breaking out of that range, and maybe we get another leg higher if we can get above 3,400.
So we're starting to dip into earnings season, as I had mentioned a little bit earlier. And before we get into that, though, you had mentioned you were watching one of the Berkshire Hathaway stocks, the BRKB. Can you tell me what you're seeing in that?
Well, with the deep fall in Walmart yesterday and the weakness in some other stocks that Mr. Buffett has been following, it led me to take a closer look at Berkshire Hathaway. And, Berkshire Hathaway was, up about 152, to start the year, and has been in a slow decline since then, kind of in that same kind of range with the market. But with some of the picks that have been going wrong lately, I've got a close eye on the 127.50 level, and a break below that could mean some real trouble down to about 110.
And then let's talk about Walmart a little bit. Obviously, the company came out and CFO shared some pretty poor guidance yesterday, saying they're expecting earnings to decline for the next couple of years and not really seeing any earnings growth until 2019. I mean, that's years away. But I know you're a technician, so just tell us your outlook for Walmart.
Yeah, it boggles my mind that someone can tell you what's going to happen 3 years or 4 years from now. Yeah, Walmart may not exist anymore.
Right,
who knows?
Right. It doesn't seem very inspiring for investors.
Yeah, when I look at the chart, if I look at a long-term chart, say a weekly chart that goes back to 2007, it was in a long consolidation from 2005 even out to 2012. It started tightening and created this formation called a symmetrical triangle between 2008 and 2012. And when it broke out of that, it started moving higher very quickly. And what it looks like now with this move yesterday, that big bearish engulfing candle yesterday, is that we might be in a situation where the stock price retraces the entire move back to the center line of the symmetrical triangle at about 52, where the next real support would be.
Another thing that has been really on investors' minds today is something like Netflix. We had their earnings report tonight, and it's full of metrics for U.S., international, user growth, DVD streaming. What are you seeing in Netflix today?
Yeah, well, actually, Netflix reported last night,
Yes.
and the stock took a real beating right off the bat. It dropped down to about 94, and then started recovering very quickly, and we're back up to about just under 104 here at the open. Long term, the chart looks really healthy.
Mm-hmm.
You had the move higher that started at the beginning of the year up to the peak at 130 in July or the beginning of August, and then the pullback recovering about 38% of that, just a nice Fibonacci retracement and a move back higher. It seems like it's a healthy stock with what I would see as a technician is a nice ABCD pattern going that it could take it as high as 170. We're long that for customers.
Can you explain that pattern for our audience?
Sure. It's a pattern that says that if you take a leg higher in a stock and then retrace, that you may see the initial leg higher implemented again on a leg that moves back up. So if you start at the bottom of that pattern, and for Netflix that would be January 2015, and put an A there and put a B up at the high at 130 in August, and a C down at the August 24th low, looking at the January low to the August high, added back onto that August low at around $90 would take you up to about 170 as the D point.
We've got some questions coming out of the chat for you, Greg. I'm interested to know your outlook on the semiconductors.
The semiconductors. Let's see what we got going on there. Typically thought of as something that will lead the market.
Right.
I'm just pulling up a chart.
No rush.
Yeah, well, there is a rush. I have to find it right.
I just pulled up the SMH chart for our traders and investors to take a look at. They've got some great questions that they'd love to get your take on, and I definitely think we've got enough time for it. So, yeah, just pulling up the chart.
Okay, well,
Take a quick look at that sector.
I've got a monthly chart of the SMH up.
Sure.
Because I think that when you're looking at something that's kind of a macro thing, it's good to look at that. And
yeah,
it had a great run off of the 2009 low up to the peak that we saw in May, June time period, and then the hard pullback. But the last 2 months have been very productive in the semiconductor space.
yeah.
You can look at the SMH. It's going to print a very bullish candle for October.
Mm-hmm.
Should it hold up like this, which is good. You've got momentum indicators also showing that they bottomed out in the bullish range and are moving higher. Flipping to the weekly basis, I see that momentum did hit oversold and has been bouncing straight up and is now back into the bullish zone. Another momentum indicator that I take a look at, the MACD, is crossing to the upside, which is a very positive thing.
Mm.
You've got 50-month or 50-week SMA, so simple moving average, right where the price is right now. It gets over that, it's got some room to go. And if I flip into the daily, let me get rid of like 9 years of data here first. If I flip into the daily, it looks very good to the upside as well. You're right at possible resistance from the slight bounce that happened in July. But you've got strong MACD and RSI in these. You've got Bollinger Bands opening to allow it to move higher, and you had really strong buying yesterday or the last couple of days. So, yeah, this is real promising to get back to the levels that we saw in May, and so from a short-term perspective, medium and long-term looks good to me.
Are there any sectors you're favoring currently?
We're looking at energy
Oh,
right
okay.
now as a turnaround, and started buying some CBS for clients. CBS,
CVS.
CBS,
Yeah.
Chevron,
Yep, yep.
as well as the XLE earlier this
Oh,
month.
okay,
The
yeah.
XLE looking like it's come off a double bottom at around 60, and had a little trouble when it first hit the 100-day moving average, but looks to be holding in fairly well in a bull
Mm-hmm.
flag, and maybe even starting to move up out of that today.
Yeah, yeah, definitely. Good look at the XLE. Another question coming out of the chat. What do you think gold will do in the near future?
Gold, I think, is looking good to the upside in the short run.
Okay.
It's got some overhead resistance, certainly at the round number at 1,200. But if it can stay over 1180, it's pretty promising in the short run.
What about the like gold and silver ETFs? Like I'm looking at the GLD right now.
Okay. Yeah, GLD has been hovering around 114 now for the last day or so.
Mm-hmm.
If you look left on your chart out to the March to June timeframe, there's a lot of previous price history in that 114 to 116-ish
Yeah.
range.
Yep.
So it might be a little slow to get through that, to work off that, but it looks promising. It's over the 200-day moving average, and the Bollinger Bands are opening up. Momentum is looking strong and supportive for more upside.
What about the silver ETF? I'm thinking it's SLV.
It's the
Yes.
same kind of structure. It's hitting the June kind of consolidation level that went through on the way down, but over the 200-day moving average with supportive momentum and Bollinger Bands pushing higher. If it could stay over 1520-ish, 1525-ish, that it's got probably some upside to maybe some trouble at 1575, but some upside to 1620, 1650.
Last one in that kind of same sector, the gold miners. Someone in our chat is interested to get your take on. I'm looking at the NUGT right now.
Yeah, gold. I mean, gold miners to me. There's no reason to buy gold miners anymore. I don't think.
Okay.
Since you can buy gold in an ETF, there's no reason to buy a gold miner anymore. Gold miners
Sure.
tend to move with gold up and down, but they tend to lag on the way up and draw the gold price down on the way down. So you lose on both relative to
Mm-hmm.
gold.
Mm-hmm. Yeah, absolutely. One last one. One I wanted to get to was to get your take on Twitter. I don't know if it's got too much fundamental news coming out lately to even look at it technically, but you want to take a quick look at Twitter?
Yeah.
Pulling up a daily chart, intraday chart of Twitter for our audience to take a quick look at.
Yeah. Now Twitter, certainly went through that period when there was no CEO, and we dropped
Mm-hmm.
from over $50 down and based it around 36 until people got even more nervous and fell down with the market down to the low 20s. It's looking a bit better now.
Mm-hmm.
You had essentially a double bottom at around 24 with the bounce in early October, and making a bit of a bull flag here over the last 4 or 5 days. Like when we talked about earlier, it bounced off of the 100-day moving average, but it's got supportive momentum behind it. The RSI and the MACD are both rising. It's also got, in terms of price history, if it can get over $32 or $31.50 even, it's really got a vacuum in terms of previous price history up to that gap at around 34 and a quarter. I hold it in a personal account, looking for a long-term hold.
Investment.
But
Okay.
it does look like it's, versus the 2850 level, it looks like it's a decent risk reward to the upside.
Okay. Just a couple minutes here left with you, Greg. Chatters also want to know what your favorite trade is for this week.
Favorite trade for this week?
Yeah.
Well, some of the gaming stocks have been looking pretty good, but the
Really?
one that I've liked the best is one that has been a long-term breakout, and that's in Lazy Boy.
Interesting.
It's not doing so well today, coming back and retesting the levels that it broke out from. But bouncing a little bit today at around $28. If it could stay over $28, it's made that probe up over 29, where it hasn't been in a long time, and making a series of higher highs and higher lows, and we like that.
Another comment or question coming out of the chat is your thoughts on some of the oil ETFs, the USO or UWTI.
Yeah, USO has been really hammered along with the market, but it looks to me as if it's still stuck in a range. It was promising to start the week and then the end of last week when it was up at around 16.15, testing the resistance levels that it hit in late July and the end of August as well. But until it can get over 16, say 16 and a quarter, it's probably not worth looking at on the long side for any kind of trade more than a day trade. And on the short side, it's probably hands off until under 14.20. So other than that, if you're a day trader and want to play the range, it's probably worth looking at.
Just a minute or two left here with you, Greg. How about some final words of advice for our traders and investors about what to look out for today, the week, the month, and the rest of earnings season?
Yeah, well, I think that today and tomorrow you're going to get October options expiration working
tomorrow,
into things, and you've got some noise associated with that. So I would expect we see a fairly tight range the next couple of days because we seem to be at some critical numbers right now. Beyond that, take a look at Monday, and the number that I've been talking about in the SPY is 201.75, and we need to close over that to shift to open the front door and load out all the cash and buy everything you can. And as I said earlier, the thing to watch to the downside is the IWM, and if that starts really running, the potential for that to head down to 104, and that might drag the market down with it. So still in kind of a range, but looking for the upside to start to happen at some point in the near future.
We've been on the line with Greg Harmon. He is the founder of Dragonfly Capital Management. Greg, thank you so much for joining us this morning. We really appreciate it, and we'll have to have you back on again soon.
Thanks for having me, Brianna. It was fun.